What price should you buy this Dividend Aristocrat stock? Hello again, fellow investors. I'm screening this favorite, most loved Dividend Aristocrat stock, KMB stock, Kimberly Clark. This stock barely moved from the last time I screened it at 131.81. Now I'm screening it again with our improved metrics at the closing price of $134.46. This is KMB's valuation summary, all red, implying overvaluation. Trading at 5.01 times EPS multiple. This is PE, 25.96 divided by the EPS trailing 12 months, 5.18. We want this below 3. If we look back at their EPS history, it's actually decreasing, which is bad. Their net income is decreasing while they buy back shares. Only 14 million shares bought in 5 years. Why is that? Because they pay out most of their earnings as dividends. 90% payout ratio. That's why they can only buy back very little shares. Trading at 2.86 times their margins with 9.08 here, the lowest margin I used to base our assumptions and our fair values from is the 2021's free cash flow margin. Their margins play around 8 to 12%. I use 40% margin of safety here because I have here a negative growth, the 10-year, which indicates that their revenues may have reached cap. Hence the 6, 7, 8 entry PEs, or it could be 6, 8, 10 entry PEs. I don't recommend paying premium for this stock as well. Very low revenue growth. You don't have to pay premium for this. Price of free cash flow is too high at 26.74. I only have an allowable of 20. PB ratio is so high at 53.04. I only have an allowable PB of 5. Historically expensive as well. I don't think KMB should trade at high teens like this, 19 to 21. I think it should trade at pre to early teens, probably 8 to 12 PEs, consistent with their margins. I have a fair value of $47.06 for KMB stock. Guru Focus's intrinsic value is $57. Not far off. Basically, it has to drop 50-70% from the current price. In all our metrics, KMB is severely overvalued. Why is that? Well, no one is selling. They have their dividends. I think it's a solid stock. Probably they all feel like it's the safest stock to park their money. Last time I used this as my thumbnail, and in the video I didn't think I answered it. This time I will. It is a trap, a dividend trap. Only if you're buying now at these prices, of course. If you're starting a position now. That's why if you still own the stock, hold on to it. Probably put some stop losses to lock in your gains. I don't recommend buying at these prices. I don't recommend adding to your existing positions here as well. Let's look at their charts. On the monthly, it barely pulled back from 2009. It's like a Tesla stock. Just a crazy run up. The stock went crazy from 09 since it break through 67. From the lows of 42, it made 3 times, threefold your money. This is 4% dividend yield, $116. This is 5% dividend yield, 6%, 7%, 8%, 9%, 10% dividend yield, $46.4. My fair value of the stock is $47.06. Now guys, can we drop that low? No, I don't think so. So this is easily in my avoid list because it's easily overvalued. Refuse to be a bag holder of the stock. If they sell their shares, it's gonna get ugly and there'd be a lot of bag holders here. I'd only recommend buying KMB at $4 to $6 so you get your 10% dividend yield. That's for the long term. Again, their fundamentals could get better and these prices could change for the better or for worse. Trade this, don't own this.